Hello and welcome back to the Toolkit for Traders YouTube channel, where we give you the tools for trading success. And we're here with our Code Your Own EA's programming tutorial series for MQL4. It's the 11th and penultimate episode. So in this penultimate episode, second to last, we are looking at trade entries, different ways that we can expand our expert advisor to include different types of trade entries. So we're going to go through that today. So the entry types we're going to be looking at in today's video, we're going to look at how do crossovers work. So crossovers are one of your most basic types of trade entries, one you'll see a lot of. You'll see a lot of indicators out there with two lines that cross over each other, and we want to know how to put that into an expert advisor. We're going to look at that today. Then we're going to look at a better entry system than a crossover, in my opinion. One that I think quite often gets you in sooner than a crossover, but I'll explain why it's not very common, but it's very good for expert advisors. And we're going to go through each of those, and we're going to put them in our code, and then by the end of it, we'll have created two extra EAs using different entry systems. So let's get into it. So the quote for this lesson: take risks. If you win, you will be happy. If you lose, you will be wise. So I really like that quote. I'm not even going to try and pronounce his name because I would get it wrong. Maybe I should take the risk, who knows. Swami Vivekananda. If you are from a region that would understand that better, tell me if I'm right or wrong. I took a risk, but hopefully you'll make me wiser by explaining how I've pronounced that wrong. But we carry on. But like I say, trading is all about taking risks and winning when you win and taking lessons from when you lose. So the first entry system we're looking at is the crossover entry system. I'm sure many of you that have been around trading for a while understand the basics of this, but we'll go through that now. So what is a crossover? A crossover is two indicator lines. Quite often they're types of moving averages that cross over each other. Very easy to see visually. When the faster line crosses above the slower line, you buy and you exit any sell trades, and conversely, when the fast line crosses below, you go the opposite direction. You sell and close any buy trades. It's very easy to spot visually, which I think is one of the reasons why it's most commonly used. If you're manually trading, and it pushes you towards discipline because you've got to wait till those two lines cross over. So how do we get a computer to recognize this pattern? Because when we break it down, it is a basic form of a pattern. A cross is a very basic pattern. So we need to get the computer to understand what we mean by this. So we have to break down the two line crossover, and we have, in computer code terms, we have our lines, and we're looking at the last bar that closed, which is the bar with the index number 1 bar ago. It's the last one that closed. And we also need to look at the bar behind where the lines were then as well, which is 2 bars ago. So we have the index for the number of bars in the past. So 1 bar back and 2 bars back. So we have effectively the current time, the current position of the lines, and the current -1, the previous position of the lines. So effectively what a crossover is that we see that one line goes from, in the previous bar, goes from being a position below. So we've got a lower value that's being plotted here, and it's going above. So it's got a higher value. So if we look at this in code terms, we're going to use an if statement, and we're going to say if the slow moving average 2 bars ago is less than the fast moving average 2 bars ago. So we've got the slow moving average. Is it less than the fast moving average 2 bars ago? And if the blue one here is the slow one, you can see this would be true. If the red one was a slow one, it would answer false. But we'll just take the slow as being here. So we've got a position where the fast moving average is in a bullish position, and the slow moving average is below it. So we're checking the past and we're saying, was the slow lower than the fast? I hope that makes sense. We need to get the position in history, and then what we're looking for is the reverse to be true with the current. So you can see here the current, it's a very simplistic example, but you can see now the slow is taking a higher current value, and the fast has now moved down to a lower current value, and this creates our cross. The values don't really matter, provided that they are different in terms of one was below the other before, and the opposite is true after. So again, when we look at code, so now for the current, we are checking for if the slow moving average is now above the fast moving average, and you can see here that it is. If the blue line is the slow, then it has moved up and it is now above. The fast has moved down, it's now below. And this is typically your bearish trade, your sell trade, because the fast moving average has moved down below the slow moving average. So we need to combine the two. We had two different conditions here. We've got what happened in the previous bar, and we've got what happened in the current bar. So now we need to combine them both, and they both need to be true for a crossover to have occurred. So we use the AND within our if expression, because we need this to be true. We need the slow to be below the fast in the past, and then we want the slow to be above the fast in the current time. Or to put it the other way around, we want the fast to be above the slow in history, and we want the fast to be below the slow in the current time frame. So the fast has moved down, we've got a downward crossover has occurred, and then we sell. So that's the basics of recognizing. That's the pattern here within this within the brackets here. That's the expression for that pattern for a downward cross. Now, if we just go back to that, obviously, if you want an upward cross, it's almost identical, except you change each of these signs. So where the fast would have been above, we now want the fast to be below in history, and then we want the fast to be above in the future, and that gives us a buy signal. So you apply them exactly in reverse, but fundamentally it's the same for recognizing a buy pattern, but you do have to have two separate expressions to recognize whether it's a buy or a sell. So what we're going to do now is we're going to head over to the meta editor, and we're going to put this into our code for our expert advisor. Okay, so we're now in the meta editor, and we're going to save this file. What we're actually going to do is I'm just going to save this because we're not going to make any more changes to this EA. We've actually got a complete EA here, which is based on the momentum indicator. So I'm going to save that with a totally different name, and I'm going to give it let's give it a cool name, because you've got to give your expert advisors cool names. The super cool momentum EA. It's the kind of name that you can sell. People will buy on the Meta MT4 shop. Give it a cool name, super cool momentum EA. People will think it's really, really special. You've seen how simple it is, but that is almost irrelevant. So we're going to do that. We're going to save that as our super cool momentum, but then we're going to save that again because we're going to make some changes here, and I'm going to change the name to super cool crossover. So keeping on the theme for some brand recognition, the super cool EAs, we'll give this a super cool crossover. And all we're going to do now is we're going to move down in our code to where we had our on bar from previous lessons. We've got our condition for going long. In this case, this is for the momentum indicator, and we've also got our conditions for going short. So we need two moving averages here, and you can see we've got our we've got our variables for our momentum indicators, so we can get rid of those. We'll just get rid of that, but we're going to follow the same structure. So we've got a fast, and we're going moving average. And remembering from the slides, we've got the fast moving average, and we want the current value of that. So that's going to equal IMA. And you can see here we've got what we need to put in here. So we need the symbol, the time frame, the period. Okay, so that's interesting. We need a moving average period for our fast moving average. Our shift, which is how many bars in the past, and then we need the moving average type, the applied price, and the number of bars in the past. The MA shift is not the number of bars in the past; it's how far back you push the moving average. Generally, don't use that. It's so we don't really need to use that, but we do need this shift bit because that is the number of bars in the past. If you're not sure on any of these, you highlight it and then press F1. And if you move across to the right, you can see it brings up the help document for that. So you can see the MA shift, indicator line, offset relevant, relate to the current offset, relate to the current chart by time frame. Basically just moves the moving average to the left of your chart. Some people like this. It's how the Chiku span on the Ichimoku basically works, by shifting it back 26 bars. But we don't need that, generally won't use it, so we'll leave that as 0. But as I say, the shift here is actually the number of bars back in the past. One thing to note is the period, I think it comes up as period, time frame. Yeah, time frames generally are noted as period variables. If you write period like this, it will come up as a variable. It should do. I wrote something wrong there, but it's not to be confused with the period for moving average. So we need to put some inputs here for our 2 moving averages, because we've got our inputs for our momentum. So we can get rid of those and we can rewrite our inputs here. So we put input to signify that we want the user to be able to change this. We want an int for a period for the moving average, and we're going to give this the name something understandable, fast moving average period. And as a default, I'm going to set that to 20, and then we need a slow one. So fast int, we can say slow MA period. And I'm going to set that to 80. Best practice is to set the difference between your 2 average periods to a multiple of 4 times. So if your fast is 20, you want your slow to be 4 times that. If your fast is 5, then you're going to want your slow to be something like 20. Don't break them too close together. You get some crazy results with that. But around 4 or 5 is about optimal. We're going to go to import. So there's a couple of others we needed. We needed the, let's go to the help document. So you can see here, we need an MA method. So we can click that and we can choose between simple moving average, exponential moving average, smoothed average, and linear weighted average. I'm going to set the default to be EMA. It's quite a common one, slightly faster than the SMA, or at least most people think that. And we're going to go back. So we want so our input is going to be enum underscore MA method. Enum moving average method. So it's basically that's an integer, but each integer has been assigned a name so that it's easy for us to code. And we're going to give this the name MA underscore method, or MA type, might be an easier one. I'm going to set this default to be mode EMA. And then the user can use a drop down to select that. And the other thing we need to choose is the type of price we're going to base this on. So again, bringing up the help document, applied price here. You can see they're all listed as integers, but we can use the enumerated lists because every integer number, you can see here 0, 1, 2, 3, 4, 5, 6 has got a name for it to make it easy to understand. So we can use that for our input. So we can go enum, it was applied price, and we'll give it the name MA_price, and we'll give that a default as mode. What were the options, just to be sure? We'll go for default is price close, so we'll do price close. You might choose median, open, high, low. That's up to you, that's up to the user. That's why we have inputs. So we put those in there. We've got our inputs now, and we're going to go down to our code, our on bar. So now we can use that. We've got lots of errors at the bottom. We just compiled that, but obviously we've got an open bracket here, and we've not finished this off, so there's going to be errors. So that's nothing to worry about at this stage. So we've got our IMA. We can now say the current symbol, so underscore symbol with a capital S. We can use the time frame as the current period. You can see that's why it can get confusing, because it's called period, but it means time frame. We want the period of our moving average. So this is our fast one. So we want fast MA period. It comes up. That's nice. Fast MA, we don't want a shift. And our method is going to be MA_type. Our price is going to be MA_price. And our shift is going to be, because this is the current, we're going to go back to the last close bar, the current close bar, which is current. So there we go. That's there. So now we need this slow equivalent. So I'm just going to copy that there, paste that, and change this to slow. And we need to make sure we get the slow in here as well. So that's there. Okay, we've now got those there. So we've now got our two values for our current moving average, or moving averages for the current bar. We need the previous as well to compare them to. So in fact, we can do a little bit of this. You know, you might have preferred to write this all by scratch each time. I tend to do it like this, even though probably sometimes it's a little bit slower. But I'm going to call this fast MA previous and slow MA previous. And the difference here is only at this last one. We're going to go back one bar in time. So now we've got our current moving averages and our previous moving averages. We don't need this momentum threshold. We can get rid of that. And we can start. Do we need to plug this into our expression here to get our long signal? So we'll just get rid of the momentum stuff here. And we're going to say, so this is a long signal. So in the past, we need the fast to be below the slow. So we're going to say, if the fast MA previous was less than the slow MA previous, so the fast was lower, and now we want the fast to be above, so the fast current is greater than the slow current. We have a crossover, so the fast was below, it's now above, using these greater than and less than symbols. We've got a long signal. Perfect. We can actually take this section in here between the brackets, and we're going to go to our short side, and I'm going to paste that in. Oh, paste that in there. Done that wrong. Excuse me. Copy that. Get rid of that, and we just need to reverse the more than and less than symbols. So one way to just quickly check is with this, you should always have the opposite. So that one should be the opposite to that one. That one should be the opposite to that one. If you start with a fast on both sides, makes it nice and simple for you. So that's it. You know, that's all we needed to do. And if I press compile, we've got rid of our errors. That's all we needed to do to make our super cool crossover EA. So now that we've edited our Expert Advisor to have a crossover system based on 2 moving averages, and you can see how, I hope you saw how easy it is to, once you've got the basic framework for your Expert Advisor, very, very, very simple then to mess around with different entry types, different indicators, because you have the framework. It's like if you think of a house, you've got all the foundations, you've got the framework in place for it. Really, you're just messing around with the furniture inside. And this is how it works with the EA. You don't have to write them from scratch every time. And once you've got comfortable with a robust system for your EA, you can actually churn them out pretty quick and get testing with lots of different expert advisors. Don't feel like you need to rewrite the wheel every single time. You know, unless you're trying to learn the method, unless you're trying to learn coding, once you're comfortable with that, you know, just take out the logic part of it, put some new logic in, insert some new indicators, chuck them around, that kind of thing. Very, very good. So we'll go to the next entry system, and I call this the gradient crossover. Crossover is probably a misleading term, but I'm going to stick to it. The gradient crossover simply means when you're looking at a moving average, it's when it crosses over from being in an upward direction to being in a downward direction. Sometimes you hear people, when they talk about trading systems, they'll say, is the moving average pointing up or is it pointing down? And we're looking at that key point when it changes, the mathematical point when it changes to going down. So why do we use this gradient pattern and not a crossover? So the two line crossover patterns carry a lot of lag, and I'm actually going to jump over to let's jump over to a chart to show you that. So I've got on here, this is the 15-minute chart for the pound dollar, and you can see here I've got 2 moving average. I've got the 20 and the 80. This is what we used in the example for the EA we've just made. And you can see here, we've got the fast in red, and you can see it comes down. I tell you what, can I make that a bit thicker? Let's make that nice and thick so everybody can see. I'm going to do that there as well. Let's do that. So I hope that's a bit clearer. But I hope you can see from there that the fast comes over and it crosses over. Now, these are crossovers are deceptive because the first thing you do is you look at this crossover and you think, wow, you know, you went from here down to wherever. But actually, you've got to train your eyes not to look left with a moving average crossover. You've got to look down, and you see by the time this crossover has got you into this trade, you're all the way, you know, you've lost out on all of this movement here. 53 pips, you're already way into this trade. And actually, when you look at where this is going to get you out, you're still in this trade, and you know you're 20 pips of profit now, whereas you have been at 90. So you've lost a lot of that. You know, this move is, how big is it? It's 140 pips, and at the moment, all you've caught out of that is 20 or so, 40 or so pips. You know, because, and actually I did that wrong. See, classically done wrong from here to about here, and you got 20. So you've lost that 20 pips because you've got to look down from where the crossover is. You've got to look down. Don't look left. Look down from where that is. Where does that get you in? Where does the actual crossover happen? There. And where's the open? Where's the close at that point that you're in? And you can see you're probably looking about there, maybe there. So you're not picking up, it's a big move. You're not picking up very much of that at all. You're still in it. If the trade goes down, you'll stay in it. But, you know, unless if you're just trading without stops and take profits, this price is going to have to go up here in order for these two to cross back over. And, you know, by that point, have you made any money? You're probably lost. And this is a really nice trend. So, you know, that's just something to bear in mind with crossovers. They get you in really late. They look really nice. They're really simple to understand, but boy, do they get you in late. So is there a better way? One thing is difficult to do when you're manually trading is if you're looking at the gradient and you're trying to determine the exact point when you go from facing up to facing down. You can see here, it's quite difficult to see manually, but it's something that's very easy for an expert advisor to. But why it's good for an expert advisor to do that is it's going to get you in a lot quicker. So if we just take the slow, if we're just working off the slow moving average, when does that face down? I think here, this candle, it starts to face you down. Maybe this one, you know, it's got you in a couple of 4 bars earlier than the crossover system. So that saved you 10 pips straight away just from there. Now, the reverse here is when you get out, it's still facing downwards, I think. So you're still in that trade, much like you are with that one. So, but this is based on the slow, so you're not going to have loads of trades. But you can see here, I mean, if you look to the left of the chart, you're in at this uptrend, and actually it's getting you out at a decent point. You're not losing those 10 pips there. Now, if you go on the faster moving average line, again, you know, my computer's just frozen. That's not very helpful. Okay, so I'm not going to move the cursor around, but hopefully you'll understand, because my cursor is just frozen on the spot and I don't want to spoil the recording. But you can see you're getting your turns in gradient happening a lot faster, a lot more often, as you expect with a faster EA, but it's getting you in much, much earlier in the trade. I'm just going to pause the recording there and see if I can get my cursor working again. Okay, so I don't know what happened there, but we'll carry on. So, you know, if we're looking here, the crossover was here. When did this turn down for this current trend? It happened here. Look how far ahead that is. That's 21 bars ahead, which is a full 5 hours ahead of that one there. You've turned down here, you're in 20 pips ahead, and you come out here. So you've taken the bulk of that, or as good as half of that trend, which is really, really good. The counter using a fast moving average is, you can see here, you was in that turn down and that turn up, so you lost that one. So you were in and out of this trend here more often. So that's always the compromise moving averages. But what I really wanted to show by showing you this was that the crossover happens here. Look how much sooner looking at the gradient gets you into that trade. It happens much sooner. It's really hard to see, which is why people don't do it manually, but it just happens way more. So how do we do that when it comes to coding? So we're looking at the gradient. We only need one line for this, a single indicator line, and we're looking at the change in gradient of that line. As I said, it's more difficult to see manually, but typically happens sooner than a moving average crossover, so that can save you a lot of pips in the long run. It's really easy to find with a robot. This is where our advantage as robotic traders comes in. You're going to find this sooner. This is our advantage. We can see this, whereas manual traders, this is a difficult thing for them. So let's zoom into a curved line. So we've got a curve there, our curved arrow. We're going to zoom in. What does that look like when we zoom into sort of microscopic level at the point the gradient changes? What does that look like? It looks like this. You know, obviously this is very up close, maybe a little bit extreme, but fundamentally this is the shape at that crossover. Just trust me on that, especially when we're talking about discrete time series. So we're talking about number of bars in the past. The shape of it is like the apex of a triangle. So it is what it looks like mathematically. So if we look at this and break this down, we have to go back to the third bar in the past here. You can see we're at a lower value, 10020. We've moved up to 10040, and we've moved back down again. Now these don't have to be at the same height, But what we're looking for is the relationship between that one and that one, and the relationship between that one and that one. And you can see that is higher than both of these. So that's the question we want to look for, is when the second value is higher than the third value and the first value with respect to time. So if the third value is less than the second value, here we go. So that's this line here. If that line, and that's basically saying is that line sloping upwards. And if the current line is, or if the second line is higher than the current value, those two combined make this shape. So this is the basic pattern of a gradient change of a peak, and the opposite is for a valley, which is to buy. So again, we'll go to the meta editor and we'll put this into our Expert Advisor. So we're back where we were on the meta editor, and we're now going to go for save, and we're going to make another EA. See how simple this is? We're going to call this a super cool gradient EA. I'm going to save that as the name, and we are going to just use one moving average here. So I'm going to get rid of the slow one. I'm just going to get rid of the word fast because it's when there's no comparison here, so we just need an MA period. And then we'll go down and put the logic we showed in the slide to our on bar section of code. So again, we don't need a lot of this. So what I'm going to do here is I'm just going to get rid of this completely. Actually, let's write it from scratch. Let's do that. Okay, so we've got a double because that's what the indicator chucks out. We're going to call this the MA. Let's call this the MA current, and we'll give this IMA. We'll go through these again. So we've got symbol, the capital, did that twice now. It's capital symbol underscore period. We've got the period MA underscore period from our variables. We've got the shift, which is 0. We've got MA underscore type. We've got MA underscore price. And we're one bar, the last close bar. There we go. I'm going to go for double, and I'm going to say MA underscore, I'm going to call this MA was. So, and I'm just going to copy this across now. So it's what it was, one bar in the past. And I'm going to, for silliness sake, I'm going to copy this across, and I'm just going to call this the MA was. So that's the 3 bars back in the past. So all we need to do is change the index in the past, compile that, and you can see I've got some errors because I'm still using the fast MA variables here, which we've got rid of. So I've got 2 bars back in the past, was, and was for 3 bars back in the past. Bit of a silly naming, but it makes sense to me, and we're just keeping it simple and fun. Okay, so we want to know 3 bars back in the past. So we're actually take a step back. We're looking for a long signal. This is a valley. So a valley looks like the 3 bars ago, the MA was higher than the MA underscore was. We've also got, so the MA was, because it's a valley, so it's the lowest point, so it also has to be less than the current. So we're going for the MA current. So here we're using this to check that the second bar in the MA was is lower than it was 3 bars ago and lower than the current value. If that's the case, that's the bottom. It's a valley. That is a long signal. We're then going to go to the opposite here. So I can take that across. We're going to go to our sell side. We're going to drop in our logic here. And we're just going to reverse, very simply, reverse the symbols. So I'm going to click compile. All our warnings have gone. Fantastic. our super cool gradient EA is done. It's as simple as that once you get going. So we'll head back over to the slides. So simple as that, really. That's how we've made 3 expert advisors. You know, we didn't reinvent the wheel each time. We've used different trade entry types to create 3 EAs that work differently, and they will test differently. So I really encourage you to take these and do some back testing. Let me know in the comments which one you think is best. You might totally disagree with me about the gradient one. I've found that the best results come with that because it gets you in and out of the trade sooner and later respectively, and you know it generally works. Simple, you know, all 3 of these are trade type EAs, are trend type EAs I should say. There are trends, especially in foreign exchange currencies, so you can exploit that, and using very simple EAs is the way to go. You don't have to make your EAs much more complicated than that. If you want to take it further, I would say one simple filter to ascertain the type of market you're in, whether it's ranging or trending, would be the only thing I would add to this if you were going to take this further. But fundamentally, what you've got from doing this course, 3 different expert advisors that you have coded from scratch. So pat yourself on the back. Well done. So the next video is going to be the last video in this tutorial series, where we're going to wrap up what we've done so far. And we're going to talk about the future. You know, I hope you've been inspired. I hope you feel like you can code now, because if you finish this and you've done this by yourself, you can code now. You can call yourself a coder, and that's really something, you know, that's an achievement. But you know, if you've enjoyed this and you want to take this further, then you're going to want to know where to go next. And that's where I want to give you the next one. I don't want to leave this course with a dead end. We're going to look at the future. So we're going to look at how you can take your coding further. So what resources I would point you towards, what I've used to take my coding further than the basic stuff you've covered in this course. I'm going to talk about the MQL4 201, which is the advanced coding course, which I'm going to release on this YouTube channel, what to expect there, as well as ways that you can influence what content I bring forward first. So you'll want to see how you can do that. And also, I'm going to give you the exciting future of the Toolkit for Traders content on this YouTube channel. You know, we've finished the coding course. I want to get into some more stuff around strategies as a whole, market analysis, and things to actually make. We've got our building blocks of making the EAs, but you know, what kind of EA do we want to make? And that's the kind of tips I want to give you. So I'm going to go through some of that. And again, you know, it's an opportunity for you then to say what you want to see in the future as well. I've already had some comments about what people would like to see. So, you know, I'm gonna take that on board, and we're gonna go into the future. So definitely tune in for next lesson. It's the last lesson. You know, get the champagne out. You've made 3 expert advisors from scratch, from knowing nothing about coding in MQL4. You should be very pleased with yourself, and rightly so. So if you have any questions, drop it in the comment section below. So far, I've answered every question, I think, in the YouTube channel comments. So do drop your questions below. I will answer them. And as well, you can join the conversation on the toolkitfortraders.com website, which is absolutely free. It's a free members area with hundreds of people on there, and we're all talking about coding and trading foreign exchange. And if you like this video, you can support me by liking this video with a thumbs up, subscribing to the channel, and you know, generally just talking below, even if it's just to say thanks for the vid. Again, all that stuff really helps me, encourages me to go on, and helps the channel grow. So that's all for today's video. I hope you've enjoyed making 3 expert advisors with me. Stay safe and keep well.